Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula, America's Medicare Associates with Nolan Baker and Chaz Price, arhq.com. That's the website. And the phone number, 419-794-3030. There's a tiny Georgia restaurant that says it is not afraid to charge a hefty fee for unruly children. One family with 9 kids was caught off guard recently when the owner threatened them with a $50 surcharge. Some customers say, they don't actually see a problem.
Depends on how bad their kids are. Parents need to teach kids etiquette. They need to teach kids to behave, that there are other people in the world, and it's okay to have fun in the right place.
Now, this fee is something that the restaurant actually implemented during the pandemic. I don't know if they're going to ever change it. Speaking of fees, though, when potential clients come into you and you do a portfolio analysis, do you have people that are caught off guard when your review reveals fees that they didn't expect to see in their portfolios?
Yeah, I think a lot of times people are, quite frankly, shocked at the amount of fees that they're not aware of when they come in and we do kind of a portfolio analysis and we go through and we take a look at them. To me, I mean, finding hidden fees is like literally putting money back in somebody's pocket. We're changing weather here in Northwest Ohio. My wife's kind of taking the spring clothes out of the closet and putting her winter clothes in there. And I don't know if you've ever put a jacket on that you haven't put on in a year, but you reach in the pocket and there's $20 in there.
It's the best.
It's the best feeling ever. So our job, to me, is like finding those $20 bills. Now, you compound that by the size of an average retiree's portfolio, and you could talk, hundreds, if not thousands or tens of thousands of dollars, especially over the course of time, that those hidden fees can erode a total portfolio. I am going to say this, though. I'm going to say the fact that the cheapest isn't always the best. There's reasons to pay fees. We don't work for free either. So it's important, I think, to know what you're paying for and know what you're getting in return. A couple of tips that I'll give you is make sure that you actually read the prospectus. So when you invest in things like a mutual fund or a variable annuity, you have the ability where you can read a prospectus. And a lot of times, I know it's challenging because you probably don't have that prospectus handy or you don't know where to get one. But if you go online and you Google the product name and or the company that you work with, you can get the prospectus pretty quickly. So you can type in the company name and the product. I just Googled one here as an example. Now, this prospectus is 290 pages, so it does take a little bit of detective work, when you go and you take a look at the different fees and expenses. In this case, it's a variable annuity prospectus that I'm looking at. You've got to add up things like the sub-account fees, the mortality expense ratio, the admin, the writer cost. But when you go to the table of contents, you should be able to identify the fee section. That's another big thing that when you come in with us and, if you want to have a portfolio analysis, we have the ability where we can slice and dice that information, get to it pretty quickly so you know kind of what your total cost is. But things like variable annuities, things like mutual funds, things like managed portfolios, those type of things, they have fees and expenses. So you want to get a good idea what those fees and expenses are inside of the portfolio. You want to look at competitive expense ratios. So, if you look at what the goals and objectives are of that strategy, is there a comparable strategy out there that offers a similar to lower expense ratio? Understanding things like sales charges. Some investments come up with upfront sales charges. Some investments come up with back-end sales charges. Other things like mutual funds have something called 12B1 fees. You might have advisory fees or investment management fees. Some companies trade transactions. I know with a lot of the major custodians that are out there today, some of them have transaction-based fees or asset-based fees. Some accounts even have maintenance fees depending upon the size of the account. And so you kind of got to read through this information, understand, and bottom line, I'd say ask questions. So don't hesitate to ask your financial advisor or the financial institution to be very transparent to you that you want to understand what all the fees are in a clear, easy to understand format. And what is associated with your investing. Transparency is kind of important here because it does add up in a lot. And we're looking at inflation is high. If you can cut some fees and expenses or increase predictable income, how much better off would you be moving forward? And so look at areas that are things that are not adding value to your portfolio to try to find and eliminate some of those hidden fees.
Yeah, not only not adding value, but they're detracting from it. It's kind of like termites or bugs or something in the house. They're hidden, but they're slowly eating away at the value of your home. And so it's important for you to identify them. It takes careful research. But the biggest thing is that we can actually prevent them. Nolan, when I first started, one of the core one of the core sensibilities I think the retirement guys have as it pertains to fees is generally you want to make sure that your yield or the income that you're getting above is greater than what you're paying in fees. Otherwise, you start the year negative. Some things like that. The other previous segment, we talked about making sure your bond fund, the duration is less than the yield. Things that, a professional would know. You might see a termite or something, but you wouldn't know the extent of the problem until you have a professional look at it. And so that's kind of what we offer. And to me, fees is a very sensitive subject because of all the things in the market that we are subjected to. Fees and what we pay for things is actually one of the things that you can control. And so a lot of the focus, I think, for our just average investors that are listening today is to know exactly where your source of expense is, what you're paying, and more importantly, why you're paying it. Because like you said, Nolan, I don't have a problem with paying fees as long as I know what I'm getting for it. It's a problem in absence of a value of what you're getting. And so in the prospectus, I applaud you for that. That is if you can't sleep at night, pull that bad boy out because it will knock you out. But there's other ways to get that information, and the advantage of living in this time is that the computer, even your phone, has a treasure trove of information about where to find hidden fees. The most common is the expense ratio. That's the expense that you pay, for instance, a mutual fund money manager to be buying and selling the stocks. And so if you have a financial planner or a financial advisor and you're paying a high expense ratio to have a mutual fund buy and sell the stocks, are you duplicating any of the effort? And if you are, why? Maybe is it a smaller stock portfolio where we do really want multiple eyes taking a look at it, or are we just picking the largest 30 stocks on the in the world? Do we need to have a really high expense ratio to do that? Those are some of the things to think about. There's also a section of fee, what we call 12B1 fee. Those are typically fees for the marketing and the commissions that are paid to the brokers that sell them to you. So there are some funds out there that offer no 12B1 fees. So those are some things that you want to look for. The other point is transaction costs and turnover. This is a really subtle, nuanced sort of discovery of fee, but it's important nonetheless. Turnover deals with the tax implications of the portfolio. How often are the managers, is she buying or selling inside of that portfolio? Because if you own a mutual fund outside of the IRA wrapper, the tax shelter, anything that gets bought and sold inside of the fund, whether or not you actually sell any of the mutual fund yourself, still gets passed on to you in the form of a capital gain. I've had it happen to prospective clients in the past that come in and say, Chaz, I got hit with the $20,000 capital gain. I didn't sell anything this year. In fact, my portfolio was down 10% this year, and it's just a function of that. Those mutual funds have embedded gains. They may own a stock 20 years ago, and they just happen to sell it this year, and the market's down. You get passed on the capital gain, your proportionate share. So, again, taxes, fees, there's rife opportunity to kind of embed some of those things in mutual funds. And if you don't know what you're looking for, it can be a serious problem that can significantly erode your assets and your investments and your lifestyle over time. I mean, because like you said, Nolan, that's money in your pocket. If it's 1% per year or even more, wouldn't it be better in your pocket and you control where it goes versus somebody else?
And to reiterate what Nolan and Chaz both said, it comes into the question of value. You can't really judge if something is of value if you don't know what you're paying. So having that fee analysis done, whether it is you going through the prospectus yourself or looking it up online or having the team at America's Retirement Headquarters help dig through it with you and, perhaps find ways where you can shift that or reallocate to pay less in fees, keep more for yourself, maybe even make that money work harder for you. It all starts with a simple phone call to reach out, 419-794-3030. You can go to the website as well, arhq.com.